Hello and welcome to episode 25. This week we reveal who won the battle between PNG and BATS. We take a look at our portfolios and we battle two Valentine's Day stocks against each other. Without further delay, let's get underway. Every week we invest £25 into each portfolio. One portfolio where you select the stocks, one that tracks the market, and one that generates income to pay to you. We'll then invest an extra £1 into each portfolio for every 100 subscribers we get. In a case of function over form, with 2 votes to 1, we sadly have to say goodbye to the fantastic ticker of BATS, because this week's winner was Procter & Gamble.
3, 2, 1, go.
Last week was not a great week for us, with a lot of red, but equally nothing too bad, nothing over 1%. In fact, the income generator performing the best with minus 0.1, the benchmark 0.5, 0.5% down, and the battle royale 0.8%, the worst performer of the 3. This week, however, slightly more of a mixed bag. Income generator up 0.3, the benchmark down 0.1, and the battle royale up 0.3. So as you can see, pretty flat. I would call that completely flat, except for some tiny adjustments. But even so, better to see a little bit of green as opposed to all red. Here are the biggest movers and losers from our portfolios over the last 7 days. As you'll see, relatively flat. The biggest change was, in fact, Reddit losing 12.8% after some earnings which were positive on the money front. However, the growth forecast, they're losing subscribers, so that wasn't great, but not too worried about that one. And the biggest gainer was AMD. Since that's fallen recently, that's nothing to celebrate either, so just a normal week in the markets, really. Coming up, well, not coming up, but rather important updates. AMD, the consensus estimates fell by 18%, and that one went up, so there you go. More good news for Spotify. Its earnings per share estimates also increased. Microsoft, a dividend coming up, that's always exciting. Not sure which director at Tesla is selling their stock, and I don't think 28 million is anything to them, so I think that's neither here nor there. And Reddit, that's what I was saying, the earnings per share and revenues exceeded analyst expectations, and it fell. Welcome to the stock market. We're now up to 23 holdings in the Battle Royale, and looking at their total return on the beach has overtaken Tesla. Its total return 72%, Tesla continuing to fall 63.8%. That was up at 100 at one point. So interesting to see Spotify, Nichols closely following them. I also wanted to point out our newest addition, Apple. It had a great week, 7.5%. We got it a little bit late, so 7.1% is our total gain for Apple, but that was a great addition, great pick last week, everybody. That's done well. The week before was 3i Group. That is also just turning over nicely. I'll definitely take 3.7% in a couple of weeks, so that's great. Down at the bottom, not much change. B&M still minus 23. Tate & Lyle, after that fall during the week, trying to catch it with minus 22. Renew, Black Rifle, they're doing really badly as well, and into double figures. AMD minus 7.7. So some big winners, some big losers, and it's exciting, if nothing else. 23 holdings in the Battle Royale, and very pleased to see we're still more in the green than in the red. That's now 13 stocks in the green, making us a profit, 10 in the red. We won't mention how far in the red some of those are, but better investors than bad investors at the moment. Turning now to take a look at the income generator and how much money it's paying us out in dividends. We're up to £17.15 per annum. That is up from £16.44. It's growing so quickly, it really does blow my mind. We're going to add our payment that was made to us in December already of £2.43. Next December already, that will be £3.37. The next payment in March is now up to £3.06. So when we add those two together to pay someone in March, we're going to get a grand total of £5.49, up from £5.36 last week. So going along very nicely. And how are our portfolios doing overall, I hear you ask? Well, we've now added £575 to each, which is amazing. And as of last week, they were all lovely in the green, going along very steadily. Income generator, the lowest growth, but the highest dividends. Let's not forget a total return of 4%. The benchmark, a total return of 5.8%. Beating the income generator, but the battle royale 10.7%, which over 6 months I am very, very happy with. This week those numbers look pretty similar. The income generator from 4% to 4.1%. That is a low growth stock and a pretty flat week in the market. The benchmark, I'm going to have to get back to you on this one because I've double checked the figures in Simply Wall Street and they are correct. However, it's given me an extra £63, give or take. It says the total value of that is now up at 668, but it should be 606, even though the value and the total value paid and the number of stocks in it is correct. So it's jumped my return up to 15.4% from 5.8, which is not correct. So I will get back to you on that point. But the Battle Royale still managing 10.8%, slightly up from last week. All in all, very happy and just dealing with the vagaries of financial calculations, the joys.
3, 2, 1, fight.
I hope you all had a fantastic Valentine's Day on Friday, whether you were spending it with someone special, just thinking about someone special, or whether you enjoyed it solo. I hope it was a good one. Whatever you were doing, you were clearly keeping Cupid busy because my portfolio wasn't too red over the last week, so thank you very much. Right, so which of the Valentine's Day stocks is best and how do they compare to each other? Let's take a look. So, first things first, which companies qualify as Valentine's companies? Well, the first and most obvious, LVMH. If you want to buy someone special, something special, the luxury goods company going from Louis Vuitton to Moet Hennessy, you're bound to find something here. Sticking on the same theme, for the gentlemen out there, Hugo Boss, a lovely suit perhaps. Burberry, that's been in the press the last 12 to 18 months or so with its struggles, but is it turning things around? Buy your significant other a lovely Burberry handbag or some of their clothing. Pandora, I don't know how many of you have heard about it, but they are a jewelry company and their brilliant scheme, if I can call it that, is that they sell these little charm bracelets, but you've got to buy all the different charms on them. So that is quite a good thing, and it's been around for ages, so it's not just a fad, and it looks like a pretty decent company as well. Moving away from the luxury goods theme, what else is good for Valentine's Day? Alcohol. And Diageo, I won't say too much about that. There loads of people have over the last 12 months. If you have a look at its timeline, you can see why over the last 3 years it just has been steadily declining, but I don't know if that's going to be the case always. Another drinks company, Pernod Ricard, that is a terrible pronunciation of a French company, similarly struggling I would say too as Diageo is, but to my mind there are potentials in that industry. If not alcohol, if not luxury goods, how about travel? A nice cruise perhaps? Carnival Corporation, they're apparently trading under Simply Wall Street's estimate of their fair value. They're buying more cruise liners as far as I can recall, and they've got a pretty decent future. If not them, let's book your significant other a trip. And Expedia, an online travel company in the US and internationally. That would be a very nice Valentine's Day present. I wouldn't say no to that. Hotels.com, and a few other online ones like Orbitz, Travel City, eBookers, Cheap Tickets, Hotwire and car rentals. So that's quite a full package. Right, so we've got to narrow it down to two. What have I selected? Tell me if you think I'm correct, of course, but I've narrowed it down to Expedia and Pernod Ricard. Both trading significantly under their fair value according to Simply Wall Street, but it wasn't just that. They both have very good earnings growth forecasts. Again, not just that, but in the case of Expedia, its earnings grew by 50% over the last year. And in Pernod's case, analysts expect it to grow by 24.2% over the following year. It does have a few more risks to it, and Expedia itself isn't risk-free. Both have high levels of debt, as far as I can recall. I think Pernod is the same, and some significant insider selling. Pernod showed you already not the best future, nor Expedia, but is that just based on current trends? Will it turn around? I think that comes down to your personal outlooks. Just to go into a little bit of the future of Expedia, its earnings growth rate is 12.2%, and its earnings per share is 15.2%. So it is a I think it's going to grow, and I think it's not a bad stock to invest in. This tracker shows you that it's Pernod has gone the same way as Diageo, with just a slow decline over the last few years. But I think it's a great entry point, and I think this is a buying opportunity for these sorts of stocks. When you look at the brands that are in here, I won't go through them all because there are 100, but there's some big ones like Absolute Vodka, Beefeaters, I think that's a gin, excuse my ignorance there. There is Malibu, that was a long time ago for me, Monkey 47, and as I say, I won't read them all. There are a few other ones I wanted to point out, but some sort of quality labels that I don't think will rarely be going anywhere. So those are my 2 suggestions. Let me know if you think they're any good. Now let's take a look at and compare their high-level metrics. And here they are side by side, pretty similar market caps. One's in euros and one is in dollars though, so but 24.8 versus 24.9 billion market caps. The PE ratio of Pernod is 16.82 and 21.09 for Experian. The revenue for Pernod 11.6 billion euros and Expedia $13.6 billion. So on those numbers, Expedia looks more tempting. However, the benefit of Pernod is that it pays a dividend of a pretty decent 4.76%, and it is slightly cheaper with that PE of 16.82. So it was really tight between these two. Let me know what you think. I'm going to do a little bit more research into both, and then we'll make a recommendation. So there you have it. What do you think? Who do you think we should invest in? I'd love to hear your thoughts in the comments. But from my perspective, I think we should invest in... And finally, all that remains to be said for this Valentine's Day episode is I give you a heartfelt thanks for watching, and I hope to see you next week. Have a good one, everyone. Goodbye.
Goodbye.